but I can't tell who it is. Could you unmute and let me know? Okay, I think we'll get started. I know Terry's having a little bit of technical difficulty, but I think all the members are here except Mr. Fultz. I've not seen him. We'll go ahead and get started. So the first thing I would like to do is we have some new members, and I would like for Russell and then Ryan to introduce themselves, please.
Hi, I'm Rusty Mouton with South State Bank. I'm a senior vice president and commercial lender, and I've been with South State for about 12 years now.
Great to have you. Thank you.
Thank you.
Hey, I'm Ryan Williamson. I'm the Director of Operations and Finance here at the Keller Williams Brokerage in Winter Haven.
Thanks, Ryan. Welcome. Okay, if everybody else would just say hello. Terry, can you hear me?
I can.
Okay, go ahead and introduce yourself.
I'm Terry Loretta, Chief Administrative Officer for Florida Children's Museum.
Thank you. Mr. Reader?
Good morning. Chris Reader with the City of Auburndale.
Thank you. Mr. Tropia?
Good morning, Sal Tropia. I'm at Bunning, Tripp and Ingley, and I'm a CPA with them.
Thank you. Obviously, I'm Carol Matthews, the Senior Internal Auditor for the Internal Audit Services Department with the school board. And we have Luke.
Hi, good morning. Luke Whitty, Assistant Director of Internal Audit with Polk County School Board.
And Davina.
Hi, good morning. Davina Arroyo, Internal Auditor.
And then we have the accounting staff here. Alain.
Good morning. I'm Alain Nunez. I'm the Senior Director of Accounting.
And Earl. Is Earl still on?
Earl, oh, there he is.
Earl, you want to say hello? Maybe not.
Earl is our Assistant Director in Accounting that manages our internal funds and food service accounting.
Thank you. I don't think Heather's with us today. Okay. Okay, so the next order of business is to accept the minutes of our last meeting, which was August 6th of 2024. Do I have a motion? One of my members that was here before.
I'll make a motion.
Thank you. A second.
I'll second.
Thank you. All those in favor say aye.
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 Any opposed? Okay, we accept the minutes, and we'll just move into our presentation by Jennifer Christensen with Carr, Riggs and Ingram. She can introduce herself and tell you a little bit about the audit that she did. Go ahead, Jennifer.
All right. Thank you, Carol. Hi, my name's Jennifer Christensen. I'm an audit partner with Carr, Riggs and Ingram, and we perform the audits of the internal funds. And so I do have a presentation I was going to share. And so today I would just like to go over a brief overview of the financial statements and then describe a little bit about what our audit process is and the types of testing that we perform during the audit. And then I'll go over our recommendations for improvements at the school level and then at the district-wide level. So the internal funds would be one fund out that the school district has. So we're just auditing one fund out of the entire school district. And this is the fund where the student activity fund. So this is where the field trip money, the prom ticket sales, the football ticket sales, the fundraisers, they all flow through this fund. And so this is all money that's raised by the students and spent on the students. And so you could see comparing 2024 to 2023, our total assets, we were at about $13.5 million. And this is for all the schools combined. And then as far as liabilities, they were pretty comparable to the year before. And they're going to be a much smaller number because, as you can imagine, at June 30th, we're during the summer in between school years. So there's not quite as much activity going on. So all the bills from the previous school year have all been paid. And so our liabilities, which is going to be mostly our accounts payable, it's going to be a low number compared to the total assets. Total net position, that's going to be like similar to equity in the organization. And that was at about 13.4 million. That's going to be the difference between your total assets and total liabilities. And then we have on the revenue and expense side, we have total additions for the year of about 14 million and deductions of about 13 million. So you could see it's going to grow as expected year after year as populations grow and as things get more expensive. We're going to expect that the cost of doing any kind of business is going to increase. And so you could see from year to year, it did increase. One thing that's a little different with the internal funds is that the purpose of those funds is to raise them and spend them in the same year. So as you can see, the amount that was spent was about 13 million and closer to 14 million in addition. Some of that's due to some timing differences, but we do encourage the district and the schools to make sure that they're monitoring their balances, and if they have excess funds, making sure that they're spending them in that same year. So moving on to the next slide. So the audit of the internal funds is something that's required under Florida statutes to be audited each year. And so we present an audit report. So our audit report was unmodified this year, which means it's a clean audit opinion. And as far as audit adjustments, we had two of them this year and they both related to recording accounts receivable at the Career Center. It was just adjusting some of the accounts receivable we have. And then for the district to let us know if any of those receivables need to be allowed for, because at a certain point, if there are amounts owed for tuition and it's for the previous school year, the likelihood of it being collected is going to decrease. And so the allowance would be an amount that the district would let us know, what they feel that amount is, and then we record it as an adjustment. We had what we that are immaterial to the financial statements, but we still have to track them just to determine that the cumulative effect of all of them is immaterial to the financial statements. And this year we just had the one, and it was actually just recording the carry forward effect of the prior year past adjustment. And so that's going to go away. And so we won't have that adjustment in the future years. And then next, as far as sensitive footnotes, there are certain things we're required to communicate with those charged with governance. And one would be if there were any sensitive footnotes. And there really aren't any what I would call sensitive footnotes for internal funds. But the one footnote we did have was we have to disclose in investments if there's any concentration, if a large percentage of investments are held in one investment or one type of investment, we would have to disclose that as a credit risk. And they did not have any such concentrations this year. So there was nothing like that needed to be disclosed. A couple other items that we would want to communicate with you if we had any disagreements with management on accounting standards and how to apply them and whether to apply them or not. And we didn't have any such disagreements. Any significant difficulties encountered in the audit, and we didn't have any of those. If the school district had any consultation with other accountants, we would need to be made aware of it so that we would know what was discussed and just what conclusions they came up with. But we're not aware of any type of consultations like that were held. And then lastly, fraud or illegal acts. If we came across any material fraud or illegal acts, we would definitely communicate it to management, but we would also be required to communicate it to the school board. And we did not come across any such items like that. When we talk about significant difficulties encountered in the audit, just to kind of give you an idea, we work with all these different groups of people, departments, schools. And so it is definitely an effort to gather all the information. We have to work with the schools, and then we also work with Align's team, and they do a great job of pulling all the information. We ask for hundreds and hundreds of invoices, deposits. And so they're all do a great job of pulling that information, pulling it timely. So we did not have any difficulties due to, how well all of these different groups of people work together and work with us. So I always like to kind of acknowledge that during my presentations. So the type of testing that we do for our audits, we audit the numbers, right? We audit the financial statements. We go through and we have to perform different tests where we look at third-party evidence to verify the amounts of those accounts. But the bulk of our testing is done here where we're doing compliance testing. And so some of the different areas we look at are listed up here. I'm not going to read them out, but you can look at them. And what we're doing is we're testing to make sure that the school is adhering to school district rules, the bookkeeper, the manual that they have for internal accounts. We want to make sure that they're adhering to school board rules. And then the state of Florida Department of Education has a red book where they have rules, and they have a specific chapter just for internal funds. And so we're testing these areas to make sure that they're adhering to all of these rules. And as you can imagine, we do perform testing at 100% of schools and departments that had any kind of activity during the year for in their internal fund, but we are picking a sample. And so we're not looking at the entire population. We're picking a sample of items. And this year, I think we had 154 schools and departments that had some kind of activity in internal funds. So we are looking at a sample. So what that means is if we come across, let's say for deposits, and we find that a school had a deposit and they didn't make it timely, or the teacher collected money but didn't turn it into the front office timely, then for every instance that happens, we're gonna put that in our report. We're gonna include that as an exception in our report. So we call those school level findings, but they don't rise up to the level of a finding like what you may be used to hearing about audit findings, where there may be material weaknesses or significant deficiencies in internal controls. These are more recommendations. But we feel like anytime, because we're only looking at a sample, anytime we come across a rule that's not being followed, we want to make sure. So now kind of going into the data of the average findings. So that's again, every time we came across something. And just to, if we have a school that had 3 deposits that weren't made timely, then that would count as 3 findings for that school. So just to kind of put in perspective. So here's our average findings per school or department per internal fund. And so this year we did increase, but you could see the trend is as expected because when COVID happened, the amount of activity went down drastically in 2020. And then after, you could see as the activity started to go back up, the number of findings went up. And that's like I said, as expected, because the less activity, then the less chance that there's a rule that's not being followed. So it has been rising the last few years as the activity has been going back to the pre-COVID levels. But if I go back and look at 2019, 2018, 2017, the average findings per school were about between 1 and 1.2, around that area. So in 2024, the number was a little higher, and we're going to talk about that in a minute. We really had one finding that I think that we had at a large number of schools that kind of skewed these numbers or increased them for the average. So we'll kind of go into that next. Here you could just see the number of findings per school. So together, schools that had 0 or 1 findings, we were at about 72%. Last year, we were at about 74%. So it was a little bit of a change, but not much. The other areas, they were all very consistent with the year before. I think the biggest change was between 0 and 1 findings. Last year, we had 52% of our schools had 0 findings, so that went to 43. And then this year, the number of schools that had 1 finding had increased from 22% to 29%. So that's really where we see the biggest difference. But as shown in the pie chart here, you could see a very large percentage of the pie is going to be 0 findings or 1. Next are a list of, we just like to list the most common findings we had for the year. And you could see at the top, this is the one that I was mentioning before. We had 68 deficit account balances for the year. And what that means is a school had one specific account that they overspent the money. So it may be the 5th grade account, and they just, maybe the cost of a field trip costs more than what they collected for the field trip. So they ended up with a negative balance at the end of the year. The school as a whole still had a positive balance. So they had positive cash, assigned to their school accounts, but it's just within their accounts, they had one that was negative, that was overspent. And you could see it went from 28 in 2023 to 68 instances. So this isn't 68 schools, but it's 68 different accounts. So one school may have had 3 or 4 different accounts that were overspent. But that number did jump quite a bit. And that is what I think skewed or I say skewed, but it is what made the average findings per school jump up from the year before and from what we would see back in the pre-COVID times, what the average was. So we'll talk about that more in a second. And then the others are, fairly typical of what I see at other school districts. There's lots of forms that are completed, fundraiser forms. And then after a fundraiser is done, there's a financial report that needs to be completed. And that's something that the club sponsor or the coach has to complete. So we do see that there are times where they're not completed or they're not completed timely because they are due 10 days after the event is over. And so that number did increase. The next one was something a little different we looked at this year, looking at disbursements. And it shows there's 27 disbursements that weren't approved, but there is a little bit of there's a little bit of a tricky finding, because a lot of times, or sometimes we saw where we just weren't able to tell because the vendor may give a quote on a certain day, and then when they actually do the order, they'll put the date of the quote on there, so it looks like maybe it wasn't approved ahead of time, but it's just because of the way the vendor system works. But we have no way of knowing which vendors, you know, the way that each vendor's system works. And so I have that on there, but it's something that I think we're going to try to test in a different way next year to make sure that we're really getting at, you know, whether these disbursements are all being approved ahead of time, being able to you know, see that. So again, it was something a little different we looked at, so that's why last year it was NA. And then the others you can look at, we had some receipts in the prior year that that weren't properly accounted for. They're supposed to be keeping track of every receipt that they have that's used or not used. And it was just trying to reconcile the ones that were used to the ones that they said they had on hand. The same with the next one, the official receipts. And so those findings went down this year. And so I do kind of like to show, and I have a graph to show for the last 3 years. But even though there are some findings where the number of instances went up, we have some where the number went down too. So I think it's important to show that too. And then funds collected, not turned in the daily office. That was what I mentioned. If a teacher collects field trip collections from the students and then they have to turn it into the front office, they really need to turn that in daily. And that's a safety issue, you know, for the teacher and the student's safety. And so we had a couple of instances where they didn't turn it in that daily. Here's the graph I wanted to show, and I know it's small, but it's more just a visual for you to be able to see. The orange is the current year, and then the light blue, and then the navy blue is, you know, the 2 years previous. But you could see the deficit account balance. I couldn't do this to scale, or else everything would have shrunk down because we had such a large number. So this should be 68 for the current year. You could see there's a lot more findings, or this finding occurred a lot more than in the previous years. But then if you go down, you'll see some of those where the number of findings went down. Some of this, the change in the number of findings from year to year, sometimes it is due to a change in position, right? You may have a new principal at the school, you may have a new financial secretary, and so they're, you know, they're learning, or they may not understand all the rules. Sometimes it's just the luck of the draw. I mean, we do pick a sample, and so it may be some of the samples we picked. It could go either way. Maybe the school had, a lot of schools will tell me this, well, we did it right the whole year, and we did one that maybe was wrong, and that's the one you happen to pick. And maybe that's true, but it could be the opposite, where maybe they weren't following the rule for the majority of the year, and we happen to pick the one where they did follow the rule. So there is a little bit of that sampling risk in there when we look at the findings, but we do note which findings are repeats from the year before. And every school, when we're done with our testing, we have a preliminary report of our findings, which we send out to every school, and we ask every school to set up an exit conference with us, where we go through on a Zoom call, we go through the findings. And at that point, if there's something, maybe there's some support that they didn't provide us when we initially asked for it, but when we go over the report, they'll say, well, no, we do have that. We have a copy of that invoice. Then we'll give them the opportunity to send it to us, and we'll look at it, and we'll go through and we'll update that test, and we'll update our report if they have additional information. But during that exit conference, we also require them to give us responses for each finding that they have. And the responses really are supposed to cover, you know, why did this happen? What are you going to do different in the future to make sure it doesn't happen again? And who's going to be responsible for doing that? So it's a sort of an audit plan for what you're going to do in the future to make sure that finding doesn't happen. And then if a finding is repeated, we do note in our report it's repeated, and that way it gives internal audit department kind of a guide to look at if there's any schools that look like they could be of concern. If they have a large number of findings, maybe a large number of repeat findings, then that gives them the opportunity to maybe look into that school a little more and talk to them to see if there's any issues that they need to investigate further. Now, as far as district-wide recommendations, we did not have any material weaknesses in internal controls. We did give a deficiency. So when we look at internal control issues, the very, say, most severe issue would be a material weakness in internal control, where there is a material misstatement in the financial statements, or compliance that's not being followed, and there's no controls in place to detect it or to be able to prevent that lack of whether it's a misstatement in the financial statements or the non-compliance. And so we didn't have any at that highest level. The next level, significant deficiencies. And so those are the ones that we are required to report to those charged with governance. And we didn't have anything there that needed to be reported. So then the next one is we're just saying this is a deficiency. This is just something you should look at. The number of, because we had 68 different accounts that had a deficit balance. So we did recommend that. The district has already implemented a plan. The accounting department, they are notifying schools of their balances. And this started back in October, I believe. They started notifying the districts if they had any of those negative balances. Because in some cases, the schools told us, well, it was either a timing issue where they overspent, but they're expecting the revenue to come in, after June 30th, or they just said they didn't realize that they had a deficit balance. So the internal accounts, they're notifying the schools if there's any deficits every month. And that way it gives them plenty of time to make sure they're resolving it. And if a school has a repeat where, each month they're overspending their account, then that gives the school the principal a chance to talk with that club sponsor, that teacher, that coach, and make sure they understand that they should be monitoring their accounts before they spend the money. So they've already implemented that plan. And then on the IT side, we had just recommended that they look at the disaster recovery failover test, that it's being done annually. And they did respond and said that they have a new site set for this next year, and that their plan is to make sure that this test is completed in the current year. So here's my contact information. If anybody has any questions, or please feel free, and I'm going to stop sharing in a second. If there's any questions on my presentation, or please feel free to ask, or you can reach out to me later at any time.
One point I wanted to make, Jennifer, was especially for the benefit of maybe some of our new members, is that collecting the funds at the school level is a very manual process. Those pre-numbered receipts are all manual, and they're tracked, like you said, through our accounting department. So if they go, if they lose a receipt, or a teacher doesn't know, you got to hang on to it and throws it away, that accounts for some of those findings as far as the missing receipts. And I assume that that's, still probably in all districts, they still use the same manual process. Is that right?
That is right. I mean, one thing we're seeing is more and more districts are going towards letting the parents pay online for, and that's been an option for, the past few years, and especially COVID kind of forced it even more. But I'm starting to see more and more districts where they're requiring that that's the only way to pay. And that there's some, pros and cons to that. There's some questions to that. Do all of your parents have the ability to pay online? And some districts think that yes, and some think no, that they may say, well, there are definitely options for them. Some will just advertise that that's the only way to pay. But if a parent were to come to the school and, to the principal and say, I don't have that ability, I don't have, they don't have a checking account or the bank account, or they don't have a credit card, then the school will then, find an alternative method for them. But different districts have different views on how much to push the online, but that does take the money out of the classroom. And it not only is it that safety concern, but then it can be automated also. So it's not the time it takes for a teacher to fill out a receipt, bring it up to the front office. And so that is something we're starting to see these types of findings reduce down and even get eliminated as more and more schools are using the online option.
Okay, thank you.
I have a question, Carol.
Sure, go ahead.
What happens? There's no more money coming in for that field trip or whatever. Does the school just another account absorbs that negative, and it's an expense written off? Okay.
Well, it's like, yeah, their total, like Jennifer had mentioned, the school's total balance is positive. It's just within the certain accounts that it may be negative. But they have to write a letter to the superintendent and explain why that happened and how they plan to get that account back out of the red. So they may have to do additional fundraisers or what have you to bring that account back in the black.
Thank you.
And there are some restrictions that, because if money's raised for second grade, you can't just move that to the third grade account. So like Carol said, the first option is they need to try to raise additional funds themselves and within that one account. So there are some accounts where you can, where you have some flexibility, but they don't have the option to just pick, like move money from one of the other restricted accounts and move it over. So they have to usually fundraise.
Right.
And if I can comment to a few of the items, the online payments is something that we in accounting are in full support of, and we've been trying to look around at different software options and platforms. Right now, we're at a standstill because that obviously requires the support of IT, and with some other major projects that IT has going on, the timing seems to be maybe middle to ending of 2026 before we can fully jump into that and implement such a software. But it would help with some of those deficit balances because it would eliminate the returned items. And we do see quite a lot of returned items on the internal fund side, since everything, the majority is flowing through checks that are coming in. Regarding the finding of the deficit balances increasing, that is something we were expecting this year. Earl and his team are doing more reviews up front before requisitions are put through and purchases are made to make sure that the correct account is being used up front rather than catching it at the back end and having to move those expenses out. Two areas of challenges that we have that we're still working on. One is a lot of our internal funds expenses go through the procurement card or the P card process. And so the timing that it takes between when those are reviewed and approved through the banking platform and then recorded internally into the ERP system can present a challenge where principals or schools can think they have more funding available than they actually do. It's something that we are always on the back end of, working with the schools to make sure they code and upload receipts timely, up to and including having to deactivate P cards if a school falls very behind on their processing on their end. But it's always one that can present a challenge for them to know what their available budget is, and that's a message that we get out to them all the time. If you don't do your side of the P card on time, recognize that your balance in SAP is going to be inaccurate until those postings happen. The other one that recently came up is the posting of field trips internally. So any field trips that use district transportation, we then have to journal and code those expenses back to the internal fund from the transportation department. And we've worked with them to make sure that we're getting the data we need from them more timely so that then we can post those on time, whereby the school would have a better reflection of what their available budget is. And I don't know if Earl wants to add anything, but
Earl, I'll try it again. Can you hear me this time?
Mm-hmm.
Okay. So yes, we did start reaching out to schools beginning in October. All principals, principal secretaries, finance secretaries are being notified monthly of their overspend accounts. But the biggest holdup is we don't know what that balance is and if they're overspent, if we have outstanding P card balances or the field trips haven't been posted. And so, for example, earlier this year, we went 5 months without field trips getting posted. Transportation Department wasn't giving us the field trip costs for the first 5 months of the school year. And so as you can imagine, any school that's missing 5 months worth of field trips has no idea what account balances they have in their balances. And schools, unfortunately, try to spend every penny they have to benefit the students and improve their educational experience. And that can lead to them spending money they think they have, only to find out they don't when those P card charges and transportation charges show up at the last moment. So for some perspective, when I sent the reports out at the beginning of March for our balances through the end of February, we were at 168 overspent accounts. And it is higher throughout the year because there are a lot of year-end things, graduations, graduation field trips to Orlando, grad bash, a lot of senior proms, things of that nature, where they're in the process of collecting money for those things, but they do have to encumber or make reservations for those activities. And so I had a lot of pushback from some of the schools. Hey, we need to do this. And I says, I understand. I'm just letting you know you need to collect enough money to pay for it and plan that you end with a positive balance. You can't sell a prom ticket for $10 if it costs $15 per kid to pay for it. So things of that nature. I also started reaching out to the regional superintendents in addition to the principals starting this month. And I plan to do that again monthly through the rest of the school year for just to get any encouragement I can to get to the schools as much time as possible to address issues. But like everyone said, like Carol said, like Jennifer said, we're very restricted with what we can do with internal accounts because we raise the money for a purpose and then we pay for that purpose. And so if we didn't collect the money for it, then we just don't have the money for it. So they're left with the option of fundraising or soliciting donations. And so that's the purpose for us to get this out there ahead of them so they can have a time to plan fundraisers. Because like I keep telling the principals, I promise you, you're going to have a very difficult time to do a fundraiser on May 25th when the students are out of school on the 27th. It's just not going to happen. They're not there. And the activities have already happened. So the time is now really for them to address that because by the time we get to June 30th, it's just too late.
Thank you, Earl. Is there any other questions for Jennifer? Okay. Well, thank you, Jennifer, for your presentation.
Thank you. I appreciate everybody's time this morning. Have a great day.
Thank you. Next, we have Mark Arroyo from the Auditor General's office, and they did the district-wide audit for the 23-24 school year.
All right, good morning, everyone. I'm Mark Arroyo. I'm the audit supervisor of the Lakeland section of the Auditor General's office. We conducted your financial audit for the school year, 23-24 fiscal year. In accordance with section 11.45 Florida statute, as Polk County District's School Board's independent external auditor, we were engaged to conduct the financial and federal single audit for the fiscal year ending June 30, 2024. Management is responsible for the preparation and the fair presentation of the financial statements in accordance with accounting principles generally accepted in the United States of America, and for the design, implementation, and maintenance of internal control relevant to the preparation and fair presentation of financial statements that are free from material misstatement, whether due to fraud or error. Our audit objectives were to obtain reasonable assurance about whether the financial statements as a whole were free from material misstatements, whether due to fraud or error, and to issue an auditor's report that included our opinions. Our audit objectives were also to obtain reasonable assurance about whether material noncompliance with applicable federal awards requirements occurred, whether due to fraud or error, and to express an opinion on the district's compliance based on our audit. In doing so, we exercised professional judgment and maintained professional skepticism throughout the audit, identified and assessed the risks of material misstatement of the financial statements and material noncompliance with federal award requirements due to fraud or error, and designed and performed audit procedures responsive to those risks. We obtained an understanding of internal control relevant to the audit in order to design audited procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness on the district's internal control. We evaluated the appropriateness of accounting policies used and the reasonableness of significant accounting estimates made by management, as well as evaluated the overall presentation of the financial statements and accompanying schedule of expenditures of federal awards. We concluded whether in our judgment there are conditions or events considered in the aggregate that raise substantial doubt about the district's ability to continue as a going concern for a reasonable period of time. We examined various transactions to determine whether they were executed both in manner and in substance in accordance with governing provisions of laws, rules, regulations, contracts, and grant agreements. We determined whether corrective actions were taken from the finding included in the prior audit report. We also assessed the reasonableness of the summary schedule of prior audit findings prepared by the district. We conducted our audit in accordance with the auditing standards generally accepted in the United States of America, applicable standards contained in government auditing standards issued by the Comptroller General of the United States, entitled to United States Code of Federal Regulations, Part 200, the Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. Our audit disclosed that basic financial statements of the Polk County District School Board District were presented fairly in all material respects in accordance with prescribed financial reporting standards. Our audit did not identify any deficiencies in internal control over financial reporting that we consider to be material weaknesses. However, we noted a certain significant deficiency. Specifically, our finding number 2024-001, district financial reporting procedures needed improvement to ensure that financial statements are properly presented in the annual comprehensive financial report, also known as the ACFR, provided for audit. Specifically, contrary to GAAP, district personnel did not report all deferred outflows of resources related to pensions and erroneously recorded insurance claims expenses twice in the internal service funds. The results of our testing disclosed no instances of noncompliance or other matters that are required to be reported under government auditing standards issued by the Comptroller of the United States. We audited the district's noncompliance with with applicable federal award requirements. The Child Nutrition Cluster, Student Support and Academic Enrichment Program, and the Educational Stabilization Funds were audited as major funds. The results of our audit indicated that the district materially complied with the requirements that could have a direct and material effect on each of its major federal programs. And that concludes our brief presentation and summary of the audit. Any questions or concerns?
If I can jump in, for the committee members, you should have received a copy of the full ACFR and the Auditor's General's report in a previous email from Carol. If I can address the finding that we had, the one related to the double expensing on the internal services side. So that is one that we've already looked at and have a plan in place for this coming year. This came as a result of of the property taxes. We start to receive our FEFP funding. The state distributes that in bi-monthly payments starting each year in July. And that funding, obviously that budget, the state amends throughout the year. And so those payments tend to hover around a similar amount, but they do fluctuate and change. But we are getting a payment bi-monthly, whereas our local capital, our local dollars coming from the two different millages we have, one being our local capital improvements millage, or what we call our LCI fund, which is restricted for facilities and maintenance, and then our general operating millage, which is the larger of the two. We start to see that money with the budget being adopted and the millage being adopted in early September. We start to receive those funds typically right at the end of November, but the majority comes in through the month of December as the local tax collector collects those funds and then they sweep them over to the different government agencies. So you'll see a $95 million loss here being reflected for October, but I ran some numbers out of the system as of last week. Our original budget for, you see here where it says local sources, as of October, we had only received 7.1 million. And some of that is other local sources that we get of revenue. But you'll see we still had the majority of it outstanding from the budget side because we had not started to collect that tax revenue yet. As of last week, we've actually received on the general fund side, our budget was $275.4 million is what we budgeted. And as of last week, we've received $251.7 million. So roughly 91% has already come in between December and January. On the capital fund side, this is still the general fund. Here's our capital funds. You can see we have a budget from the local side. Of that 187 million, 108.8 million is budgeted for our local capital millage. We've received 99.5 million of that. So again, roughly 91% as well of our LCI funds are in. So when we receive those bulk disbursements during December and January, we obviously send that money out to some of the investment accounts that we have to hold them there, try and earn as much interest as we can for the district. But then through the next through the next calendar year, till we receive our tax money again in December of this year, we'll start to draw down from those investments in order to meet cash flow needs. So it's kind of, with the state, it's more steady. We get 2 monthly payments from starting in July through the end of June for the fiscal year, whereas with our local tax dollars, it's more of a roller coaster. We're drawing down from the previous year's collections through July through October, November to meet our cash flow needs. Then we get a lump sum in January, and we start to work our way down from there through the next year. The other item I like to usually share is our projection for the ending fund balance in the general fund. One figure that the board is very aware of and usually likes to be kept up to date on is what the ending fund balance is for our assigned and unassigned fund balance in the general fund. That's the part of the fund balance that the board has a lot more discretion on how to use that funding. Some of the other items in the fund balance are the restricted. As you see there, we have certain funding from the state that's required for certain programs, so it's restricted, as well as our inventory. As at October, we were projecting to end the fiscal year at 7.85%. The board many years ago passed a policy where they want to see the fund balance end at 5% or higher. The state rules are that any district that falls under 3% in that assigned fund balance in their general fund is now out of compliance if that happens, and the state will step in at that point. They'll see that as a deteriorating financial condition if that number falls below 3%. So the board set a policy to budget and keep it at 5% so that we have, some flexibility above that 3%. The latest figures I checked with our budget department to project what the ending is going to be for this fiscal year. It's still, they don't have a projection as of this morning. It's important to note that some of you may be aware, the negotiations for salaries with the teachers union is still not finalized. There are some agreements already that have taken place, but it has not been ratified and finalized by the union. So the numbers they gave me is, as it stands right now, just with the projected raises that are to happen, we would be looking to end fiscal year 25 at 8.1%. I'm sorry, that's without the negotiated raises. If those were to not happen, we would end at 8.1%. But we know that negotiation is ongoing and will ultimately occur. As it stands right now, with the projected raises that are being negotiated on, if those were to take place as it stands today, the ending fund balance would be 7.3%. But another figure to look at, and more importantly, is probably more around where we think it will negotiated raises in place, but also we have a loss that we were just made aware of through the FEFP of $19 million for the year. That's the state money that we get. That FEFP reduction was $19 million, and that would put the ending fund balance at 5.7%, which is still above the board's policy of 5%. That loss came as a result of student counts, FTE changes. The state put out what is called third calculation with that, again, that amendment that happens with the budget every year, the multiple amendments. It's actually kind of late to be receiving it. Last week, we received it the first week of March. Typically, third calculation, the state puts out middle of January. The state had a delay. It was all school districts were waiting on that calculation to come out to be able to make any amendments to their budgets, depending on what that change was going to reflect. In talking with individuals from the state, part of their delay in getting that third calculation out is dealing with the vouchers for the students, the homeschool and the private school vouchers that the students get, and the state being able to reconcile on their end the count of those students. Because what many districts were seeing is at the beginning of the school year, you would see where a parent filed for the voucher, had the intent of doing the homeschooling or sending their child to a private school. But later on, as the school year progressed, October, November, if plans change, if that private school could not provide the student the services they needed, they would bring them back into the public school. Well, that part of that funding had already followed the student to that private school, or the voucher was already issued to the parents that were doing homeschooling. And so the state had to kind of go back and reconcile the counts to make sure if a student was being reported at a district, but at the beginning of the year, the intent was they were going to go to a private school, where in fact was that student actually at, and then being able to reconcile and adjust so that, again, the funding can follow the student. If some of that funding was consumed already by the private school, then what portion is left to go back to the public school that is now servicing that student that came back in? So very complex. The last 2 years with that new legislation passing, hopefully the state is looking at some changes into how all that is calculated and how they reconcile on their end, so that the school districts can get can get those calculations sooner and know what the impact on their budgets are going to be.
Hold on, there's a question in the chat.
Yes, I'm sorry. Mr. Mountain, are you referring to our local funding or our FEFP from the state?
I'm referring to, are we going to, or do you anticipate collecting what we projected at the beginning of the year for the amount of revenue?
So for the local tax dollars that we receive from the property taxes, we always budget at 96%. So that number that you see there reflected in our budget is 96% of what was calculated from the property appraiser's office. We always just budget at 96% to allow some wiggle room for what and also traditionally that's what we've seen. We tend to collect between 96 to 98%. We do see some residuals from prior years that come in the subsequent years, but typically 96 to 98% is what we seem to collect from the property appraiser's calculation. From the FEFP, the state side, we will get what they tell us we will get. With third calc, like I said, there was an adjustment to our district where there was a $19 million reduction from what was projected for the beginning of the year. But it's important to note that revenue is based on student count. So that $19 million reduction is reflected in a reduction in the student count that was projected at the beginning of. So with that student count coming down, then our expenses also go down because there's less students in the system.
Yeah, theoretically, that's correct. That makes sense.
Yes.
Very good. Thank you. That's all I had there.
Any other questions for accounting? Okay, Aline, thank you for that presentation. Now we'll move on to the internal audit update. I trust you can see my screen. No? Because I didn't share. There we go. Now can you see it? Okay. All right. We're going to start off talking about some school audits and investigations that we did as a result of various ways it came to our attention. We have several that the accounting department brought to our attention, and then staff members and so forth. So I'm going to let Luke, he worked on these. I'm going to let Luke talk to you about these.
Hey, good morning again. Yeah, we're going to go over these. You can ask questions as we go. You can put them in the chat, or you can save them for the end, whatever you prefer. So the first one was related to the career technical and adult education area of the district. That includes our technical colleges and our adult schools that are within the district. So there was a staff member at Ridge Technical Center who reported to us concerns about fund balances in the school's internal accounts. District level transfers between internal accounts and reallocation of funds were made without the approval from the directors of the tech colleges and the adult schools. So this actually resulted in some of the internal accounts of the school being in a deficit, and as well as funds that were deposited to incorrect accounts, including a faculty account that is not allowed by policy. So the new senior director who just came on at the end of last year of the CTAE department She responded that they are committed to ensuring that all fund transfers and reallocations will strictly adhere to board policies and also require that the necessary approvals are obtained from the directors of those schools. Let's see, we have a couple related to a specific internal account. So the accounting department requested that we audit the following schools' PTA/PTO internal account. So this internal account is an account that is specifically designated for like donations that are received from the schools outside PTA/PTO. So an outside PTA/PTO would be like an organization that has an external bank account. You know, their accounting doesn't flow through the school district's internal accounts. It's a separate organization from the school district. So Polk City Elementary School, the school has not had an operative outside PTO for 9 years. So that we reviewed all of the deposits and expenditures in their PTA/PTO internal account for the 23-24 school year. So obviously, since they didn't have, an outside PTO that was functioning and operative, there shouldn't have been any, revenue that was coming into this account, because this account is only for monies received from an outside PTO. So what we found was that there was purchases for staff from student funds totaling $4,057. Incorrect use of the PTO just overall of that internal account, and also errors in coding deposits. So at the end of the audit, we basically provided the school directive on how to reclassify all the monies that flow through that account. So they made the necessary reclassification of expenditures to the correct fund or internal account. And also they did more transfers to actually zero out that account, because, as I mentioned, there shouldn't have been any money flowing through it in the first place, since there wasn't an active PTO at the school. We also directed the principal to the internal accounts manual so that she could reference it for the future. There is a in-person training that's typically conducted for principals and secretaries. But the assistant director of accounting, Earl, at the time of the audit, he also offered the principal a separate in-person training, just a one-on-one with the principal and finance secretary, because that is something she requested. So that was also offered by the accounting department for that audit. And then again, with the PTA/PTO internal account, this was Lincoln Avenue Academy. The school did have an active external PTO in this case. So our method was the same. We reviewed all the deposits and expenditures and the internal account for the current school year and 2 previous years. The majority of revenue, it did appear to be from the school's PTO. So it was, actual funds that should have been in the account, but there was also funds from just general student collections and fundraisers that were being deposited into that account as well. So it was all being mixed together essentially in that internal account. So of that total that was collected, there was only $1,068 that could be spent on staff from the PTO. But during the audit, we actually got a letter from the PTO that they approved the use of an additional $8,545 to be spent at the principal's discretion. And, obviously the principal chose to use it for faculty. So therefore, there was $17,326 that was spent on staff in total. And if you subtract the $8,545 and the $1,068, you get $7,713 was excess funds that were spent on staff that should not have been. So they should have been, in a different internal account, spent on students, etc. It should not have been spent on staff. So we recommended the necessary transfers to move funds to the correct internal accounts. And then other things that we also found just during the course, of the investigation of reviewing all of their deposits and things were collections that weren't properly documented on pre-numbered receipts, funds that were not turned into the school office the same day collected, and deposit reports that contained inaccurate and missing information. We did advise the principal of the appropriate policies and procedures for internal accounts, and we made recommendations, in our audit report and other things as well. So, all right, this is the last of the PTA PTO investigations. This was Rochelle School of the Arts. The school does have an active external PTA. Again, the method is the same. We reviewed all the deposits and expenditures and that internal account for the current and previous school years. The revenue totaling $17,463 was posted to the PTA PTO internal account during those years. It was primarily from student collections for things like uniforms, miscellaneous merchandise, school fundraisers, et cetera, just the things that students would generally pay money for during the course of the school year. So of that total revenue that posted to the account, we identified 3,905 that could be spent on staff. However, there was a total of 5,250 that was actually spent on staff. So that was an excess spending on staff of 1,345. Again, we recommended the necessary transfers to move funds to the correct internal accounts. And when I say that in all these cases, it was basically reclassifying the expense to the faculty account. So when they spend in excess of 1,345 on staff, we go back and say, hey, that should have been spent out of the faculty account because that's the only account where you can spend money on faculty and staff. So they basically reclassify the expenditure so that it charges the faculty account. That way all the accounts are made whole, so to speak, at the end of the audit. So other findings that we found during the audit: forms and receipts, collections not turned into the school office the same day, deposit reports and bank deposit slips that contain inaccurate or missing information, and an unauthorized purchase in the amount of $15.83 made by a staff member with the school's purchasing card. That was a personal purchase that was made with the district's P card, but the school was reimbursed during the audit when we brought that to the attention of the school. So we advised the principal of the appropriate policies and procedures for internal accounts and made other recommendations. So,
Luke,
yeah.
can I
Yep.
ask, what is the time frame for these that you're reporting on? When is it current? Is it for last school year? What?
So they were all different. The first one that I went over was just like the current year, but then those next two, we look at the current year, and then what we see is like when we go back to like a previous year. So like, for example, 23-24 was like the year we were looking at for those, but then when we went back to 22-23, we saw, hey, there's like a lot of staff expenditures and that year too, and there's like a carryover from year to year because internal accounts, the funds carry over from year to year. It's not like a budget account where you get a new budget every year. Whatever was left at the end of last year is just swept back to the general fund or whatever. Internal accounts is like your personal checking account where the balance rolls, every month, every year from year to year. So it was hard from an audit standpoint to like make a clean break at the end of the year because there's money that's, donation that was received for students in 22-23, but part of that money is rolling forward to 23-24. You see what I'm saying? So it's like we had to kind of figure out the best way to, just make it so that we're reporting on all the money together and that it made sense for us. So in some cases, it was actually 3 years. I think one was just 1 year because there wasn't as much activity the previous year. So we had to kind of make that judgment call as far as what years to include on that based on the activity that we saw in that account. So.
Thank you.
So Tannenrock High School, this is not related to the PTA, PTO internal account. different subject here. So the principal brought her concerns to internal audit that the school's band director was not following policy for funds collected, expenditures, fundraisers, and the utilization of the band booster club. Because the booster club officers, so like the president and the treasurer, etc., they were not very active. The band director, he was serving as sort of a quasi booster treasurer who was receiving fund collections from students and making expenditures himself. He had access to Cash App and a debit card associated with the booster's external bank account. So our method, we reviewed the boosters' financial records, including their outside bank statements, the general ledger that was kept, and then receipts for expenditures and the Booster Club's annual financial report. So revenues primarily from concessions and fundraisers totaled $9,825, and expenditures totaled $8,866, resulting in a profit of $959 for the 23-24 fiscal year. Expenditures did appear to be related to the purpose of the band booster club itself. However, one thing we did see was that there was 3 purchases for $82 that were delivered to the band director's home address, which is, not good business practice. And then we had no way to verify if all the cash collections were actually accounted for because just of the questionableness of the records that were kept. So the main thing here that we made our recommendation was that the operation of the booster club is not the responsibility of any school employee. So somebody who's working for the district, the Polk County School District, should not be collecting funds on behalf of an outside organization. That's the duty of the officers of that organization. So we advise the principal that if the booster club were to continue in existence, it should be operated by a board of directors made up of volunteers, membership of parents and community members. And then the principal must require financial accountability of the booster club, including the policies and procedures outlined in our report and on a checklist that we have and that we provided to the school and to the booster club as well. We did recommend that the principal issue the band director a letter of expectation or a level of discipline as appropriate in this audit. So, okay, if there's no more questions about those investigations, I'm going to turn it over to Davina, who's going to briefly talk about some payroll audits that she completed.
Hello, good morning again. So we completed the payroll audits for the 23-24 fiscal year. We issue a summary report for all 21 payroll audits completed for the 23-24 fiscal year. The report and bar graph of common findings from the past 3 years were issued to the school board, superintendent, management, and to all schools and departments so that they can see the type of findings we typically have in order to prepare for future audits. 6 out of the 21 audits, 29%, had more than the average number and severity of findings. For those schools, we recommended that the principal provided increased oversight to ensure that the payroll records are accurately accounted for. We also commended Carlton Palmore Elementary for having a minimal number of findings. The most common findings that we found were as follows. SAP posting errors in all audits, 100% of them. Time record deficiencies in all audits, 100% of them. Leave form errors or omissions in 19 out of 21 for 90% of them. And non-exempt employees working outside of their normal planned working time without approval or adjustment to pay in 16 out of 21, 76%. And then the principal did not approve all payroll entries in SAP, which is an internal control deficiency in 14 out of 21 audits for 67% of them. We also found unrecorded absences in 6 audits out of the 21, so that was a 29%. We also completed, and that was it for the payroll audits for last school fiscal year.
Anyone have any questions about the payroll audits? Okay,
Then we also did the outside support organizations. So every year, outside support organizations, PTA, PTO, booster clubs, etc., are required to submit an annual financial report, an AFR, to the Internal Audits Department. We sent reminders and work with school staff to obtain missing signatures, final reports for closed-out groups, etc. We receive an AFR for 114 out of 120 schools that have outside support organizations for the 23-24 fiscal year. Those schools that did not file an AFR with the district received a finding in the internal funds audit from the external auditors. Any questions on that?
Thank you, Davina.
Mhm.
Okay, so now we have two more audits that I'm going to cover. I know we're getting a little late here. We did a purchasing card audit. The district utilizes a purchasing card program where every principal and director of a department is issued their own credit card. And so we looked at a sample of those. During the 23-24 fiscal year, the district had 768 purchasing cards, and the purchases totaled 10.9 million. We audited the purchasing card activity for budgeted funds because Jennifer Christensen and her group audit purchasing card activity for the internal accounts. So we looked at 25 schools and departments, total of 28 cardholders for last fiscal year. Three cardholders had clean audits with no findings. We had a couple of school and two departments. And then the rest of the findings are listed there. Temporary increases in credit card limits were not returned to their normal limits in a timely manner for 7 cardholders, and that's our purchasing department that lists those increases. Approval was not on file for a credit card limit increase requested by a cardholder. They have to request and then it gets approved, so that wasn't on file. The refresher training course was not completed by 9 cardholders in our sample. We had some disallowed purchases by 1 cardholder, insufficient receipts for 42 purchases by 16 cardholders, account coding errors 64%, and a TDA, which is our temporary duty assignment form, was not attached for travel related expenses for 5 cardholders, 14 travel expenses. Sales tax was paid on exempt purchases, and other required documentation was not attached. Each new cardholder must attend a training session before being issued their card, and an online refresher course for procurement cards is required to be completed annually by all card holders and their support staff who serve as their delegates. A P-card manual is also available on the district website. Any questions about P-cards? And then lastly, we did a travel expense audit. We reviewed a sample of in-county and out-of-county travel reimbursements to employees. We looked at Florida statute and in-house policies and procedures. We tested for proper calculation per diem, proper paperwork, etc. We looked for any duplicate payments and reviewed internal controls. The findings were a TDA was not finalized before the commencement of out-of-county travel in 7 cases. A duplicate payment was made to 1 employee. Mileage was calculated incorrectly for 2 employees. 9 employees requested the incorrect amount of per diem based on the agenda for their conference. 15 out of 60 vouchers included errors or omissions, and a conference agenda was not attached for 1 reimbursement. As you see, accounting does a preliminary review of all of this before they make a reimbursement, and so they caught a lot of this. couple of things, a few things that we caught during the audit, but then they were retroactively corrected. And that's all I have for that. Any questions on that? Okay, well, I think our last order of business is to nominate a new chair. I have spoken to Miss Terry Loretta, and she expressed her willingness to serve as chair. She's been a member since October of 2020, and she has valuable experience, and we appreciate her dedication to the committee. Are there any other nominations? Anybody want to serve as chair? I figured nobody would be jumping up and down, but okay. So seeing none, let's call for a vote. All those in favor of Miss Terry Loretta to serve as chair of the Audit and Finance Committee signify by saying aye.
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 Any opposed, like sign? The motion passed unanimously. Congratulations and thank you, Miss Loretta. And we can schedule our next meeting for Tuesday, June 3rd at 9 a.m. That suits everyone. I try to do the first Tuesday, keep it consistent. Okay, well, thank you all for your time and participation. Have a great day.
Thanks, Carol.
Thank you.